Good morning, trading world. It is June 22nd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. I have been talking about a temporary tradable bottom for a few days now. I got long a few bull put spreads to kind of put my money where my mouth was on Friday. Because the vol box that I drew was still in play, I also told you the plan for those put spreads were to buy back the short legs when we tested the upper third of the vol box, which was done on yesterday. So I bought those short legs back. Now we can cash in on the long puts as we go back and test the bottom third of the vol box. The question for the market today is, will it pass the retest? If the market puts in a higher low, it opens the door for a real bear market rally to happen, and not just a pop on short covering. A lot of the short covering has taken place, but can it spark some real buying? The 4-hour chart is starting to make a case for holding above the 362 area to create that higher low. The key here will be to look for divergence, not just on the intraday chart that you trade from, but on the 4-hour and daily time frames. This could happen in two ways. We could get a higher low, or we could make a lower low with divergence in play, meaning we see lower lows in price action, but your indicators don't make the lower low, showing momentum is with price. Also, we do have some Fed speak today throughout the course of the day, so be careful of Fed bombs dropping into the tape today. With all of that being said, let me bring up the key levels of the day. All right, here we go with the key levels of the day. Starting on the resistance side, we have our jack resistance at 370 to the 372 area, and as you can see, there is a lot of resistance here. So it's going to take a couple times of bouncing off of this level in order for us to pierce through it, if that happens today. Our queen resistance is 373 to the 376 area. This just happens to be the POC as well, point of control, and this is where price could rest comfortably for a while and chop around. Then we have the king resistance area from 377 to the 383 area. On the support side, we have jack support at 368 to the 367 area. Then we have our queen support at 366 to the 364 area, and then king support 363 to the 358 area. The main thesis for today is bearish, closing below the 375.07 with a projected target low of between 367 and 358. The alternate thesis is bullish, closing above the 375.07 with a projected target high of between 376 and 383. Remember, we are still in that vol box from last week. The box and thirds from last week is still in play. And at some point, the trend channel that I keep pointing out will be tested again. this is what I keep talking about as far as the retest. Will this short covering begin something bigger by making that higher low and holding support at the bottom of that trend channel? The current main channel that we're in is 364 up to 379. The next major channel down is 364 down to 353. Keep in mind, if we go up, the major channel above is 379 up to 397. Now let me bring up the scenarios for the day. All right, it was basically a toss-up between the expanded range day and the trend day down structure. But logic won out for the expanded range day structure to be the first scenario to watch for. So, on the expanded range day structure, we could look to set a decision area high boundary around the jack or queen resistance area before starting to retest the previous lows for the day. Nothing says we have to go all the way back down here, but it is very possible. I have one scenario drawn up, and there's always a vice versa or many different ways that a range day could actually go. And one thing that we want to be careful of is that this down move here could actually bring us all the way back down to retest the overnight lows. And if it does that, look for it to push a little bit lower than those overnight lows. It could reverse just before or give us that equal low or push just below. But either way, the main thing to be looking for is that divergence where the indicator doesn't make the same low. So if we could see that, and what you're looking for here is that this low is not breached, we would look to see something play out like this, where this is the low and the indicator doesn't make the lower low, but price action does. And that just tells us that momentum is not with price action. So it is very possible that we could start to see some real buying pressure build, and we actually make a decent rally or the start of a decent rally. That's our scenario number one, the expanded range day structure. Let me bring up scenario number two. All right, scenario number two is our trend day down structure, and the probability for this and the expanded range day are pretty much the same. So you definitely want to pay close attention for both of these moves happening, and the way that you differentiate the trend day down from the expanded range day is on the expanded range day, we're going to have a close above the previous close. So we would actually pierce here, and on the trend day down, this will act as resistance. We shouldn't break through or close above that line. So on the trend day down, we open gap down and start with a pop back up toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the morning. We find midday chop around either the possible queen or king support area. And that's our trend day down structure. It's also going to be, I'm curious to see how we close, because a lot of times the close has a lot to do with what direction we go the following day. So if we have a strong rally going into the close, it could be quite possible that the short covering has sparked some things, and we start to get some real buying and start to see this real bear market rally start to take shape sometime soon. All right, our last and least probable scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support before spending the same energy we used coming down to go back up the second half of the day. There is also a vice versa warning on this as well, because we could also get a continued push up from the open, find our midday chop somewhere between the jack and the queen resistance area, and then with this come down the second half of the day with the same force that we went up with the first part of the day. So that's our rounded reversal day type structure. Again, the most important part in trading, as I say every day or close out every pre-market video with, is that understanding and knowing your risk is supremely important with every position that you take. And that's usually why the day structures are so important, because it kind of gives you a place to mark off risk or keep you from taking unnecessary risk. So again, I hope this helps, and as always, wishing you a positive trading day. Have a great day.